from Business to Traders, and today I'm going to be talking to you about moving averages. In particular, I'm going to be talking to you about simple moving averages. I'm going to be telling you what they're used for, who uses them, and how I use them. So without further ado, let's get going. As per usual, we're going to start with a clean sheet. So let's clean the chart off. Just to let you know, we are using Sierra charts. We do recommend Sierra charts. Sierra charts is amazing. And I trade the indexes, and we're just going to be looking at the SPX 500, which is the US 500 stocks. Now, the top 500 stocks. Now, what we have here, we're on a 3-minute chart. This is live today as of the 20th of October. And we've just had the open half an hour ago. And at the moment, we've seen a little bit of an uptrend. Now, I'm going to add some moving averages on there. Now, I have a set number of indicator setups because in Sierra charts you can set them all up. So, and I prefix everything, so I know exactly. If I'm using SMAs, which obviously these are SMAs, I can say, right, I just want SMAs with an RSI. So in this instance, we've got an SMA 50 with an RSI. So, which makes life a hell of a lot easier. So that's my top tip for Sierra charts. Set up the analysis. Now, we are going to do that as part of this tutorial. So again, we're just going to clean it back. And we're going to start with the first SMA. So for press S, it jumps down to the S studies. So, no, hang on a minute, we need M for moving average. Although it's a simple moving average, it's done the other way around. So, here we go. The first one we are going to put on is the slowest, which is going to be a 200. Now, I'm going to set that to black. That's what I have mine set to. The brighter the colours, I tend to kind of depict as a faster moving average. Just another top tip there. And we're going to set this to this. Now, what we are going to do is just change this to a daily chart. And just going to clean those lines off. So there we have the 200. Now, another top tip, again in Sierra charts, but again these are very useful, is if we jump into the studies and what I want to do is name the label. And I'm going to put SMA 200. Now, we set that to apply, and then you can see over on the right hand side it tells you that that is the SMA. Now you can also highlight it like so with the value label. So again, that's quite useful. So obviously when you're setting your targets, straight away you can see that the SMA 200 on the daily is 3125. Just ignore that, that's a signal. So, right. So, next on our list is the SMA 100. Now, to speed things up here, I am going to duplicate this and then double click on this. Change this to dark blue. And then the other input that I need to do on here, over here, is change it to 100. Now, this is known as oversold. So when this hits this line, and obviously you can see here, I'm just going to highlight this as an example. Highlight it with my vertical line indicator. There we go. So I set the date on it as well so I can see there. So obviously you can see there on the 23rd of September, it was oversold, it hit that and then rebounded, and obviously that was a nice trade for someone that if you were trading off the SMA 200, which people do. Tends to be bigger institutions that do that. Now, the next one on the list is gonna be the 50. So we're changing this to 50. And then what I'm also going to do on here, I'm going to change this to auto color. So, oh, I think I need the red the other way around actually. I think it's the other way around. Always get mixed up here, but not to worry. We'll apply this just to check. Yeah, right, it's correct. Right, so now obviously what we do need to do, just a point to note on these, apply that for that label, and just need to do that on the 100 as well. So what have we got? I've got another 200. Then this. Oh, we didn't actually change that to be the 100. There we go. Right. Let's just double check these as we're going along. One is 200, and that is labelled 200. That's cool. I'm going to move that up so it's the correct ID. That's my 50. That should be labelled 50. And the input should be 50, which it is. And then this is my 100. And I just need to make sure that's labelled 100, which it is. I also want my 100 to be blue. That's correct. So we're now all sorted so far. So got the 3 on there now. We've got the 50, the 100 and the 200. Now the final one that I'm going to be sticking on there today I'll duplicate this out. Number 4 is going to be the light colour. And I want this to be a 20. And just going to do the input as well. Just check that's correct. Oh. They're pretty much at the same level. SMA, that's 20. 200 there. So you can see these pretty much are over each other, so it's overlaid. If we just going to change that to a 30-minute. Just whilst this is doing this, so who uses these SMAs? Well, institutional investors use them, retail investors use them. For instance, Paul Tudor Jones uses them, Jerry Parker. These are all highly successful professional traders. So if they're good enough for them, they're good enough for us. So now, obviously, you can see here the longer and straighter the line, the longer the actual SMA. So this is based on 200 bars. This is obviously 100, and this is 50 and 20. Now, obviously, 20 is classed as faster than a 200. And potentially, what could we actually use these for? Well, we can use these for managing risk. We can use these for entering trades. We can use this for exiting trades. We can use this as a trailing stop loss strategy, all covered in different videos. If you have any questions about them, please do email us or comment down below. I'm more than happy to do a particular video for you. But obviously, just going back to the moving averages, we're now going to save all these off. 2 moments. It's my young son coming in the office. So what I'm going to do is say SMA, and then obviously I'm going to say we've got the 200, we've got the 100, we've got the 50, and we've got the 20. And then what we do is save all, and then obviously we have them. Now, what that does, obviously I'm going to clean the chart to show you. Clean chart. If I want to have those set SMAs on here, just 2 sets, mouse, do not play up. We have them there. They all come back up. So as you can see. Now, obviously, what I would do on this, we're going to slightly modify this. I would recommend on the 50 to have it wider so you can see. Now, what we say with the SMA 50, that's the uptrend definition. So obviously, if it is in green, then we are going up. Now, as you can see, we are currently in red. So at the moment, we're saying it's a downtrend, which it is. It dropped down quite quickly yesterday. So now we're back up at the SMA 50, price is back up. So this is when we say we're potentially going to be changing from bearish to bullish, so to speak. So the price is currently at 3458. Now, I wouldn't really be looking at a trade just on its own on using simple moving averages, but I do use them as part of a trading strategy. Now, in this instance, and we're just going to move back on the chart to show you. This is a good example. Obviously, we've been climbing up here. We can see the SMA 50 changes and it's back to red. And then here, it changes back to green. And obviously here, which is the fast 20 line, crosses. So I'm just going to draw that as an ellipse. This is a moving average cross. Now, some people do trade moving average crosses. Like I say, I don't do them on their own. I do them in collection with other trading strategies. But in this instance, and this you can back test, so obviously you can take a particular stock, say for instance Amazon, and see whether it back tests well with a particular cross, i.e. for instance a 50 over a 20 cross, or a faster cross, for instance a 5 over a 20. Now, here as an example, we've got a 20 faster crossing over the 50, and as you can see, we potentially could enter it. Then you could move along and keep in the trade, and then as an example, as I mentioned, you could then use, for instance, the SMA 50 as your trailing stop loss. And if you did that, as you can see, it didn't hit it there, but it nearly did. And then you go all the way up and it didn't hit it, it didn't hit it, and it didn't hit it, and then bang, it's hit it there. So moving averages are actually very good for using as a trailing stop loss stroke and exit. So this is how I use moving averages. And if you have any questions, like I said, just put them in the comments below or email us at Business of Traders. Now, let's see if there's anything else that we want to show you. I'm just going to scroll to the end to see exactly what is going on in the market as we speak. So, it was hard down. Obviously, you can see that the 20 crossed over the 50. And as an example, I'm just going to show you the SMA 50 with the RSI. So combined here, obviously we've turned the red. If we added an SMA 20 on there, so I'm just going to duplicate that one. Just going to make that into, so we can see when this is trending up and down. Now, what I'm going to just do on that, I just need to change the input to 20. And then I'm going to add this onto here, again using my set process for setups. Now, what I wanted to show you here is how we cross over here. Here we go. So if you're not catching all the move, because as you can see, if we look at the retracement on this instance, I'm just going to show you just how much you're catching. This is crossing after 40% of the move. So it's just to bear in mind that, and obviously, then again, I always tell you the bad bits. Because a moving average is based on the past, depending on how fast your indicator is, i.e. if you say for instance 20 is against a 50, right, depending on the cross, does depend on how quick you'll get a signal. Now obviously the quicker you get a signal, the more fake signals you'll get because of market noise. So you've got to kind of do your back testing, you've got to decide what time frame you're trading on, you've got to decide what's best for you depending on the time that's available for you. But as you can see here, and I just wanted to highlight as an example, combining the moving average with the RSI, we can see it's oversold there, and you can see there basically obviously we've gone from effectively being overbought here, which is here as an example. And we've got a little bit of divergence there if you look on the indicator to the price. We can see the crossover, and then obviously at this point you can then exit potentially. So you're not using the moving average for exit there, you're potentially using this as an exit, because we know then, because we've hit the 30 over under 30, that it's classed as oversold on the RSI. Now, just going to show you one more thing on this. So pretty much what I'm actually going to do is modify these to, I'm going to remove these and just show you some faster indicators, and these are just a little bit of snippet. We're going to do a 5 and a 20. So the 5 is going to be fast. I'm going to leave that light green, and then we're going to add 20 as well. We are going to auto color on this one. Just going to check we've got it the right way. Yes, we have. Yes, yes. I always increase the thickness to number 3 to see, so I can see it easier. 26. Where are we? There we go. So on that one, 26, we want this to be 20. and then the fast one is the light coloured one, which is 5. So we're just going to see where these cross. Again, I'm going to, on the 5, increase the width because I just can't see it. I'm also going to do the same as what I did on the other one. I just find the auto colouring really helps me gauge whether or not I'm bullish or bearish. Now, you can see how this crosses faster. Now, obviously, it crosses faster both ways. So, dragging this out, effectively, we've got a buy signal there, but you're effectively not going to be in the trade for very long before you're going to be thinking of having to come out. So, we're crossing there at 47. We're not technically oversold, and then potentially exiting because we are oversold. So you'd have to move out on that pretty quick. Obviously then we're crossing back down, and then obviously that hasn't hit the old oversold, so that potentially wouldn't work if you had that particular strategy as an example. Now remember, these strategies don't work 100% of the time. What you do need to do is back test. You need to decide how much you're going to risk on your stop, and then you need to decide on your risk to reward, and then bang, do your back testing, and then if it works on your back testing, then it's got a higher probability of working in the future. Remember, every single day on the markets is different. I learn something every day. The market never ever behaves the same. Having said that, we do have common traits of the market. So we know that the market only trends 20% of the time. So that means realistically, if you're a trend trader, like I am, you should be spending 80% of your time not trading. And I'll leave you with that top tip, right? As Warren Buffett once said, investing and trading is all about giving the money from the impatient people to the patient people. So decide on who you want to be. Do you want to be the impatient person, or do you want to be the patient person? I know which I am. It's a lot harder to not trade than it is to place a trade. That's my top tip of the day. Bye for now.